Have you ever looked at your profit and loss statements or your tax returns at the end of the year and thought to yourself, where did that cash go? Managing your cash is critical to the financial health of your business. And the key to running a business is to having more cash today than you did yesterday. And if that's not happening, we need to find a way to get your cash flow back on track. My name is Cherie, and I'd like to welcome you to the 60/40 Cash Flow series. This series will focus on the 14 things that you can do to begin to take control of the cash flowing in and out of your business. Over the past 15 years, working with my accounting practice clients, I've helped hundreds of small business owners to work less, earn more, and to create a business that supports the lifestyle that they want. Is that what you want? Because these tips are just the start of how we can help you do the same. Tip number 5 is to take a really deep look at your gross profit margin. The gross profit margin is simply the total revenue that you would make from a sale, less the total amount of cost of goods sold. The gross profit margin figure can then be stated as a dollar value or as a percentage. So that means that then there are two key elements to managing your gross margin. First is your sales price, and second is your cost of goods sold. We've already covered your sales price in earlier tips, so let's look at your cost of goods sold. This is a variable cost that is directly related to producing or delivering your product or service. In this context, a variable cost is also known as a direct cost. The very technical definition is a cost that changes in total as its cost driver changes. Variable costs per unit remain constant despite changes in the cost driver. So what does that actually mean? Variable costs vary because they'll increase or decrease as you sell more or less of the product. The more you sell, the more money you'll bring in. However, you'll need to use some of that money to buy more product to replace it. Variable costs can also generally be called cost of goods sold or cost of sales. So again, these are costs incurred only in delivering what you actually sell. So for example, in a cafe, cost of goods sold would be the food and the beverage costs directly related to the actual sale of the goods. Generally, it will include things like supplier costs, raw materials, sales commissions, delivery or shipping charges. A change in any of your costs will affect your gross profit margin and ultimately your net margin. We've also created a worksheet that you can use to look at your cost of goods sold or COGS for each product to see where you can make any savings. On the money meter, because the gross margin is made up of two parts, it affects both the money in and the money out. Now this is the first tip that touches on the money out side of the equation. And it does that because you're looking not only at your top line revenue, but you're also now looking at the expenses that go into your cost of goods sold. The impact here is a medium because chasing costs can only be so productive, and there is only so much that you can cut before it begins to impact upon the quality and service delivery of your goods. Cost cutting on its own just leads to a death spiral, and that's not what we want. But that's not to say that over time you and your suppliers might just not become complacent with each other or a little bit too comfortable, and there's always room to revisit the costs that you're being charged, ensuring that you're getting any volume or other discounts that you've been promised, and checking in on the pricing to make sure that it's still competitive. These are the things that you want to look at. The ease to implement is also a medium. This is because it will require investigation into your product lines. You'll need the names of the suppliers, their list prices, and if this is the first time that you've really looked at it, it might seem challenging, but in working through the process, you'll also get a better feel for how much things actually cost. And if you haven't done a review like this for a while, it's always good to ensure that your sales price is keeping up with the cost of the product. So now is the time for the brainstorming, but here the focus is on the question of reducing the dollar value of your cost of goods sold. If you were to reduce the overall COGS in your business by say 5%, how much of a difference would that make to your overall net profit bottom line? So how are you thinking about going about it? What are the things that you think that you could do? Let us know what you come up with on Facebook or on LinkedIn, and if you're on LinkedIn, please use the hashtag GrowWith6040 so that we can find you. Here is a YouTube extra content. Here's the 3 things you can do to tackle your cost of goods sales line on your profit and loss. Now the first is to automate what you can. Now this isn't about cutting jobs or anything like that. This is actually about using the technology that exists to streamline and systemize the work that you're doing, which can lead to frictionless customer delivery and lessen the likelihood of data entry errors and ultimately lead to cost savings. The second point is to look at your suppliers and whether there are any additional pricing incentives or structures that they'll give you in order to enter into long-term contracts with them. So even though you'd be locking yourself into a single supplier, which does have its own risk, if you're able to make a sizable decrease in your cost of goods sold, this just might be worth the trade-off. Now the last point is to take a good hard look at your process flow or workflow process. Now you do this through a tool called process mapping. Here you choose the starting point. Now this might be whether the prospective customer first contacts your business or from where the sale is made and comes time for production. Without getting too complex, just take a piece of paper and a pen and write out the steps that the job takes from the starting point to when it goes in and comes out as the end deliverable to the client. Now your end deliverable might be anything. It might be service related, like a set of financial accounts and tax returns for an accountant, or product related, like a finalized caravan for a caravan manufacturer, and anything in between. The purpose for doing this is to identify what steps go into that work activity, the resources needed at each step along the way, and any people attached to the functional roles that are needed to complete the tasks. This, along with any information or documents that flow between all of the steps or handover requirements, just to make sure that it all happens smoothly. If you have a truly complex system, it might be worthwhile to look at getting some external help. So someone with process mapping experience is who you're after. It can also be good to have a third party with an objective eye to evaluate the flow and see if there's areas for productivity improvement or to avoid double handling or any time lag. For example, in my business, I realized that I was the bottleneck in my own flow, as there are a number of steps where review points circle back to me and I was held up looking at them, which later delayed the later work, and it created friction. So by changing the process flow of how the work occurred and removing myself from a number of steps, building in the automatic checkpoints, it simplified the workflow and created a much faster turnaround time for the work, with the same level of accuracy due to the use of the data validation checkpoints that then I ultimately built in. So if that's what I've done, I'd love to see what you can do in order to identify any choke points in your business process flows.
Thanks for listening to this tip in our cash flow series. We've got more to come, so keep an eye out for them as they're released on our social channels, or sign up for our email list where you'll get a fast pass to access these tips and more. So just head on over to 6040.io/cashflow to get your access today. And just a reminder, there's 14 tips in total in this series, and we'd love to have you back. Have an awesome day.